Good morning. This is the video newsletter for Buy Sell Short for Sunday, July 31st. This is going to be a pretty short video today, quite simply because we're almost all cash except for our call options we've got on some of the banks as we wait for the debt deal to pass. But, yet again, we've got some positive outcomes. It seems there is a possible deal being developed now between the White House and the Republicans, and we may not get a deal. The fact that the White House is actually talking about a temporary few-day extension if there's a deal on the table should be viewed as positive. Even if we don't get an actual deal going into the market tomorrow, the fact that they may extend the debt ceiling window by a couple of days should be viewed as positive in the market. We've got our gamble calls, like I said, on some of the bank shares, because in my opinion the banks are probably what we're going to see go up the most. As you can see on the Dow daily chart, over the last week we're down 600 plus points as we waited for these idiots in DC to actually come up with a deal. But we've got pretty strong support here. We've got the inklings of a possible deal, and in my opinion, once we get a deal or the framework for a deal, we could be looking at a 300 to 400 point up day, big up day. What will drive that initially will be the large caps. So even though the video is going to be pretty short today, I've got a couple of other emails coming out with a watch list and some price targets of some larger cap stocks, just to give us an idea of things that are going to move first, as well as the Pop Scan, which has got some very, very nice plays. Now, you recall the Popper Scan Thursday, all-time low on the Pop Scan. Every single time I've seen it, well, it's lower than it's ever been as far as I can remember. Every time I've seen it down this low, we've had a large near-term rally in the markets. So the last time that trigger actually happened was back in late June, and we ended up pulling out an 800-point move. If we look at the last similar scenario that we have in DC right now, and that would be the TARP vote back in 2008, when they finally passed that TARP vote, we had a 1,000 point up move on the Dow. Granted, I don't think we're going to see that size of a rally here, but if we get this debt deal resolved, I could easily see us pushing to the 13K plus level this month in August. So fingers crossed that these idiots can get a deal going this weekend. As you can see on the Dow, we've got really strong uptrend line support right here at the 200-day moving average. Resistance is the 12,750 area. Flip over to the daily chart. Again, breakout on the 15-minute chart is the 12,350 area, and then it's off to the races here. SMH got really beaten over the head, and this is definitely something, if a deal is looking to get passed, that we should see some very nice upside here. The two sectors I think are going to lead are going to be the banks and the techs, and as you can see here, obvious first target would be a move back to the 50-day moving average on the SMH at 3370. We did, or some of the guys in the chat room are already long some SMH calls, some of the September $34 calls. Any sort of deal, these calls will be in the money like that. So after that, secondary target would be a move up to that $35 area. A couple of charts just to check out. Mentioned in the chat room on Friday, DUSA, as you can see over the last couple of days, despite a bad tape in the market, has been holding up pretty well. This is a stock that loves trading at its 20-day exponential. That's up there at 550, so will be an obvious target there on an entry, and you can place stops at Friday's lows, which were 495. Another one that looks really interesting here is MGIC. Again, similar action as we've seen on DUSA over the last couple of days. Targets 550, 575 to 6, and again, stops would be Friday's low if you consider an entry on this one. These are the kind of charts you want to be looking for, especially if we get a big up move in the market. You're not going to be able to get in all of these just simply because there could be a large gap up. Another reason why we've been high cash, I'm playing our call options in JP Morgan, the XLF, Goldman Sachs. Banks should move first. We've got minimal exposure cash-wise playing the call options on this, but we're able to participate in some of the big upside that should happen if indeed we do get a deal. And actually, let's check out those charts right now. GS Goldman Sachs is one of these banks that should do very, very well on a debt deal passing. The market rally email I sent out, conservative targets on them, simply because that's how we do things, conservative targets, but really a big market rally on a debt deal. We could easily see Goldman Sachs run $5 to $10 plus, which is why we're in those October calls, which even though the stock price has pushed down since our initial buy there 3 or 4 days ago, the calls are actually up 30%. So very nice setup here on these calls. I would not be surprised to see Goldman Sachs pushing that 150 area sometime in the month of August after the debt deal passes. So definitely a very nice setup. Another one that we jumped into some calls on Friday, XLF. This gives us some exposure in the other financial stocks. JP Morgan, JPM is a large component of this one. As you can see from this area, quite a few times over the last month or so, it's gone on very nice runs. So the target on this one would be a move back up to that 200-day moving average, 1565. And those September $16 calls could easily be a double or a triple on a big move on the XLF. So we've got some low risk, high reward, small cash outlay call option plays for a market rally. That way we can sit back, be high cash, and then go cherry pick from the market rally list of plays that are lagging that should do very well. Once we get that initial big large cap rally, like it always does, the steam or the action will roll down to the small cap stock. So while we have this large cap rally, we'll be looking for these nice setups like we see on the popper scans and go from there. So that's it for the video. Fingers crossed that these idiots in DC can come to some sort of agreement sometime today, and we could be looking at a very nice update. If we see absolutely no agreement this weekend, or actually today, we're probably looking at a test of the 200-day moving average, or maybe even the June lows come tomorrow. If that happens, I would probably be looking to press my bet on our call options and actually maybe start to go long a couple of our market rally plays, just initial nibble plays. So that's what we're looking at. If you've got any questions, feel free to send me an email. Otherwise, I will see you guys in the chat room tomorrow. Goodbye.